So what we want to do is we want to look at the gap and look at the stuff that's not factored in and where you buy is in the gap at 7 o'clock, and that's where you make your money. Because I think sharing real things with you is important. And I want to share the negatives and the positive because I think you'll learn from both. I just don't want to, because everyone's like, George, all you do is show these great successes all the time. And look, it's true. That's because that's what we do, right? We have great successes. And but when we don't have successes, I'm happy to show that as well, too, because we need to.
Yeah, Nick's just asked a question. Unions urging Fed Labor to limit negative gearing for first property only. How will that affect us if legislated?
Look, they're always trying to legislate something. And one thing I've learnt, whenever legislation changes, there's always some great ways around it. There's always loopholes and there's always another strategy. And I think once something happens, we'll find a way to get around it and still do well. So Trump wakes up, has a bad chicken masala or butter chicken and goes, that's it. Those Indians, I'm charging them 50% from now. That's it, done, right? What I like to buy is things that are bread and butter. What a bread and butter is? Something that a person or a family would like to buy one day. And we're going live. Yes. Hello, this is George Markoski. I'm here with Charmaine Adam. Welcome to
Hi,
the Money for
everyone.
Life podcast. Welcome. We're going to be talking tonight about this one mistake that could cost you millions. And it's very important because there's a lot of people that sit in the sidelines and they analyze and think, and they're like in their head thinking about, okay, I want to get involved in property. I want to get it right. And they overanalyze and spend a
Yeah,
lot of time not thinking, talking, vasculating, but not doing anything,
missing
right?
opportunities.
That's right. And with a property market that's moving as fast as it is, this is a massive opportunity cost. And people want to get the perfect property and the perfect strategy and the perfect tenant. And I'm here to tell you there's no perfect property, no perfect tenant. The perfect property for me is a property that's going to double every 7 or 10 years and make me a ship ton of money, right? That's the perfect property. A lot of people do this thing called a complex equivalence, right? And what they do, what a complex equivalence is you say this means that, but it doesn't. But so, for example, some people think being next to a school is important,
Yes.
and they're like, okay, I'll get a suburb near a school. Does that mean you get a capital growth? No. Having a suburb near a school means you're next to a school. That's all it means. But it doesn't actually mean you're going to get growth. There's more factors involved in that. It's not that basic, right? So if you're too basic, and then people go, okay, another rule, be 8 kilometers from the city. Well, this is the problem with that. That property's always been 8 kilometers from the city. So that's already factored in because people know it's 8 kilometers from the city. So it's too late. So when you factor in things, if things are already factored in, then it's not really an advantage to you. So what we want to do is we want to look at the gap and look at the stuff that's not factored in and where you buy is in the gap at 7 o'clock, and that's where you make your money. When people try to align too many things, they end up buying 11 or 12 o'clock because what happens is people, if you look at the property clock, 12 o'clock's the peak up here, 6 o'clock's the bottom. Now, picking the bottom's really difficult. So what I do is normally I'm looking at 7 where there's been a little bit of growth. So then I've got a bit of momentum behind my strategy. So therefore I can get faster growth. Because if you buy at 6, you could be catching a falling knife and it could just keep going down. Or 2, you could be stuck there for too long. So you're better off paying a little bit more, buying at 7 and having momentum that's going to push you all the way through and get you equity quickly, get you up there, right? That's the thing. But what happens is people that are nervous, they're like, I want more evidence. And they keep wanting more evidence. When you get enough evidence that a suburb is good, that's 11, 12 o'clock. When everyone else is buying there, when Channel 10 are going, Glenelg's the best suburb, it's gone up 5 years in a row. Too late. When you buy those property magazines and they go, oh, you should buy in Gladstone. They've gone up 20% every year for 5 years straight. Well, guess what? Too late. It's already gone up. So that's the one thing. Now, to be honest with you, I've lost millions from vasculating on property myself. So I've made the same mistake myself. So I remember when I first started investing, I found this property in Parkside in Adelaide, and already had 2 properties, and they were negative geared, so they were costing me a lot of money, and it was going to cost me a lot, but it was 260,000. That property now is worth about 4 million.
Wow.
Right? And the thing is, at the time, I was like, oh, $300 a week. It's tough. I'm not sure. And back in the 90s, $300 a week was a lot of money. Not like now.
Mm.
Very different. But if I could go back and get a time machine and talk to George, I'd say, George, that's a $4 million mistake. Work an extra day a week, get off your ass, don't go out Friday night, get the property, right? So that's what I do. So that's the mistake. Now, unfortunately, Adam couldn't be with us tonight because Adam's sick and he's in the hospital. So I hope he gets better soon. And Charmaine, you're my host,
And the
co-host.
hostess with the mostest.
That's right. So what I'm going to do is I'm going to go through the state of the nation. And then what I want to do is I want to show people real deals that we've done over the last year or so that people have done in our group. And I want to talk about rental return because a lot of times you look at a property and the rent might seem a little bit low and it's negative $100, $200 a week. And a lot of people hesitate because of that. And what I want to do is go through live examples, and some good, some bad, and show you what people have actually achieved in real life. Because then gives you a bit of an idea. Because I think sharing real things with you is important. And I want to share the negatives and the positive because I think you'll learn from both. I just don't want to, because everyone's like, George, all you do is show these great successes all the time. And look, it's true. That's because that's what we do, right? We have great successes. And, but when we don't have successes, I'm happy to show that as well, too, because we need to. But we've just been very fortunate over the last 20 years where we've had lots of great success.
We have.
So first I'm going to go to the state of the nation, and then we're going to go do that. Here we go. So have a look at this graph. This graph is Australia's SEEK applications per ad index, and look what's happened recently. It's spiked. It's gone up. So type the chat or type in Facebook, what do you think this means to the property market? Because what this really means, this graph means that there's less jobs. Unemployment is rising. And you can read the comments, Charmaine. That'd be great. But what do you think's happening here? Right? So basically, when an index spikes like this, it's not just a blip. It's a canary screaming in the coal mine that something's happening because that's quite big.
Look, Scott says we're about to hit a PI. Maybe that's a peak, is it? A PI?
Okay. Well, okay, so we haven't got any answers. I'll have to give it to you. I'll tell you what this means, which is fascinating because you'd think less jobs, less money, property prices will go down. Wouldn't you think that? Well, guess what? It's the opposite. The last 3 times this happened, property prices went up. See, more people applying for fewer jobs. That means pressure on wages. Business is slowing down. Mainly, maybe because the RBA likes to keep interest rates really high and really stuff up the Australian economy. I don't know. They're thinking, let's keep them up and try to. So, but last we saw this kind of trend. The last 2 times, 3 times, property price exploded over the next 5 years. So you've been hanging around this group for any length of time. You already know what that means. But those who want the full picture, here's how it plays out, right? So job market weakness is a flashing bright red light. The surge in applications per ad means businesses are freezing hiring and more people are chasing fewer roles. It's economic tightening in real time. Because what happened was the last 5 years, we've had a lack of jobs, not a lack of jobs, a lack of people to work in jobs. So this is very different how it's changed, right? But see, once economic tightening happens, people get nervous. And when fear rises, only 2 groups emerge. The uninformed who freeze and wait, and the educated who act and shift into assets that protect and grow their wealth, right? So this is what's happening. The smart money moves to property. So why do smart investors flock into real estate during job market turndowns? Well, basically, it creates cash flow, if you know what you're doing, is inflation resistant, builds equity over time, and has never gone to zero. Because people don't want to rely on a paycheck anymore. They want control over their financial future, right? So what happened was during COVID, jobs went down. Afterwards, property prices went up. Then before that, 2009, we had unemployment rate go up. And after 2009, we had a massive boom. In the 90s, same thing happened. We had a massive unemployment rate. Property prices boomed. See, 2009, GFC, Seek applications per ad spike. Property prices barely dipped and surged by 2013. 2021, job applications soared again. The market panicked briefly, the property values went nuclear. Brisbane, 44%. Adelaide, 47%. Perth, 25%. National rents jumped 30%. Same pattern, same pressure, same opportunity. Another sign that property price is going to boom. I
A
tell
lot
you
of
what,
confidence there, isn't it? Looking at the past and what's happened there and what we can predict in the future.
yeah, look, Mark Twain said history doesn't repeat, but it rhymes. And it certainly does. And I look at history all the time. Whenever something happens now, I look back in the past to go, okay, what happened last time? Because, for example, what I was telling people before, when interest rates went up, I told everyone property prices are going to go up. Why? Because you think interest rates going up, property prices will go down because it's harder to borrow. But what happened every other time interest rates went up, property prices went up 5 years after. So I just look at what happened in the past, and usually same thing happens over and over again. So the good, you're already here, you're informed. The bad, most Aussies won't act until they're priced out again. The ugly, waiting and watching has never built wealth. Let's wait and see is the most expensive sentence in property investing. So the real question is, will you be the one collecting rent or are you going to be paying it? Your move.
That's
I
a
like
good
that.
way.
Isn't that
Like playing chess, isn't it?
great? Well, look, I know what I'd rather do. Since a little kid when I played Monopoly. But I want to go back to people that procrastinate in property and are never sure and are always waiting to get it perfect. I had a friend who wanted to be a cyclist and he had a lot of natural ability, right? He was really good in high school at cycling. And so what he did, he wanted to be a professional cyclist and he got stuck into this. He wanted to get the perfect Lycra stuff. So he went around
Outfit.
looking at it, getting magazines, got the outfit. Then he got the perfect bike. Then he wanted to get Shimano brakes and change those. And then he changed something else, got a new helmet. And he ended up with 3 bikes, 4 uniforms. But there's one thing he didn't do.
Right.
Actually, ride. Yeah, he didn't ride. He didn't ride. He was just preparing for that perfect ride. And he
Wow.
was researching, he read all the magazines, and he heard that this one wheel works better and there's carbon fiber now. So he got rid of his old bike and got a new one with carbon fiber, but never ended up doing it. So the thing is, you got to be in the game to win, right?
Mm.
So you want to be a bike rider, you don't have to have the perfect bike. What you need is you need to ride and practice and become good. You want to make money out of property. You don't need the perfect property. You need a good property, an excellent property that's just going to double every 7, 10 years consistently over and over again. That's what you need. And you don't want to get caught up wondering and ifing and ahhing because there's no perfect property. But they're perfect in 5 to 10 years because they all go up when you get the right ones. That's what I consider a perfect property. So let me share my screen again and finish the lay of the land because it's very interesting about what's happening in building and stuff, which I'm always
It
learning
is.
a lot about.
Yeah, Nick just asked a question. Unions urging Fed Labor to limit negative gearing for first property only. How will that affect us if legislated?
Look, they're always trying to legislate something. And one thing I've learnt, whenever legislation changes, there's always some great ways around it. There's always loopholes and there's always another strategy. And I think once something happens, we'll find a way to get around it and still do well. Because I don't think property as an asset class relies on the government. So negative gearing and other things, that helps us and makes it really easy at the moment, which is great. But if there was no negative gearing, would I be doing property? Hell yeah, I'd still be doing it and still making lots of money out of it, except it'd just be harder to hold. However, if there was no negative gearing and it was an even playing field, it might be easier to hold because everyone's rents would go up even more. But unfortunately, the rents are so high already. God, I don't want them going up anymore too much. But the fact of it is they're going to go up. Rent's going to go up. That's the fact of it. It's the state of the nation. Queensland may start fleeing to Victoria. Now, this is tongue-in-cheek, but since the pandemic, Queensland has been a magnet for residents of southern states, mainly Victoria. So over the last 5 years, 163,000 people relocated to Queensland. So you have a look at this Queensland population change, right? And net in-state migration, right? If you have a look at that, It's quite high. It's gone right up. You look at net interstate migration 2015, there was nothing there. And then 2018, and then 21, it went right up, and it's still pretty high. Many of these residents went to Victoria. Victoria lost 82,000 people over the same period. So you look at Victoria population change, and you see the green line, it's underneath negative, right? Because people are leaving Victoria, moving to other states, especially Queensland. But even the net overseas immigration was negative for a while there because of the lockdowns. Everyone just went back overseas. Brisbane dwelling values surged by 90%, but Melbourne only did 20. So you look at the line here, 2020. Look at Brisbane and Melbourne, almost identical. Then you get Dan Andrews coming in and totally frigging shit up. And then look at this. And look, I don't know if you remember, for the last 5 years, I've been saying that Brisbane's going to replace Melbourne as the second biggest city in Australia.
You did, yeah.
I've been saying that for a long time. I didn't expect it to happen this quick, but it's happening. Brisbane's going to be the second biggest city. It's going to be the number 2 city in Australia. They've just got a better government, better weather. It's just going to happen. Melbourne is broke at the moment. And you look at the 5-year growth, and the weakest growth was Melbourne. But see, that weak growth in Melbourne, there are some opportunities because there's a gap.
I'm going to mention, let's talk about the gap in Victoria, because Victoria's still got some growth to go.
Well, look, absolutely. And what you've got to do is you've got to compare prices nationally and see where the value is. Yeah. So Trump's tariffs, they're not going to dent Australia's economy, right? So Trump administration announced on Friday, Australia's time, that Australia would be subject to 10% tariff, right? So if you look at this trade with the United States, service exports, good exports, and trade balance. So we import more than we export to America, right? So therefore, a trade tariff of 10%, which means they have to pay 10% extra if anything comes from Australia, is not affecting us that badly because we don't really send a lot of stuff there. Our trade balance is actually very positive because we export a lot more things than we import to most countries. So Australia is very healthy that way and really good. Part of the reason is because we've got so much minerals and stuff like that. But if you look at this, UK is 10%, Vietnam 20%, Indonesia 19%, Philippines, China 41%, Canada 35%, Mexico 25%. Recently, India has gone up to 50% now from 25%, only today. So Trump wakes up, has a bad chicken masala or butter chicken and goes, that's it. Those Indians, I'm charging them 50% from now. That's it, done, right? So if you look at our baseline tariff, we're 10%. So we're better off than any other country, right? Because we had a free trade agreement with the US that's been in operation since 2005, but it was really in the US's favor. So the 10% is not that big. So if you look here, evolving estimate of US global effective tariff rate, ours is pretty low, but you look here, estimated impact of US tariffs over the medium term. Now you look at Australia and look at the impact on us.
Yeah, it's small.
Read FA. Then you've got New Zealand, but look at China, Canada. Look at Canada, their best friend. Canada are screwed, right? It's really going to affect the economy badly.
And they are piping up about it too, the government in Canada.
They are. They certainly are. Did you see South Park did this thing about Trump, their first episode? That was pretty racy.
That's funny. I've been referencing South Park today with my kids. It's funny that you mentioned South Park. It's been a while since I've watched it, but we've been referencing it all day with the kids.
What I love about South Park is adults could watch it and kids can if you cut their ears, right?
Especially Cartman. He's a funny little dude.
So builders are saying Albo's housing target remains a distant goal. So there were 15,984 dwelling approved in trend terms in June, the highest in September. Despite the rebound, 20% below our monthly 20,000 run rate required to meet the target to build 1.2 million homes over 5 years.
Yeah, wow.
So we're way below. But what I was going to say is also approvals are below where we need to be. But the thing is, approvals don't equal completions because approvals are always higher than completions. So if you've got 15,000 approvals, you're going to have to take 5% off to get completions. So you can see this. look at where the graph is now. That housing target, we're miles off.
Yeah.
Not only that, it looks like it's going to take us a long time to get there. Here we go. Let's have a look at this. They reckon 23, 24, we've got a shortfall of 86,000. Now we've got a shortfall of 47, 25, 26, shortfall of 18,000. So we're going to have a shortfall till after 2030. So they estimate even 28, 29, there's going to be a shortfall of 3,000 houses. There you go. And that's my session for tonight. And I'm going to go through the members' wins and go through the Q&A. I'll let you run that, Charmaine.
Yeah, absolutely. So whilst I'm bringing up my screen, we did have a question from Adam Vella. So if the growth in Melbourne is weak, does that indicate that Victoria or Melbourne is at a 6 o'clock property market?
Good question. What it indicates is that it's softened a little bit, and the property market, there's 15,000 suburbs. And so because there's 15,000 suburbs, we can't say that Melbourne is 6 o'clock, but what we can say is quite a few markets in Melbourne is 6 o'clock, but there's also 7 o'clock. You name what part of the clock, there's all parts of the clock all over Australia because there's so many suburbs. So there's suburbs that are 7 o'clock in Melbourne, suburbs that are 12 o'clock. It depends on demand supply ratio of that particular suburb. Hope that makes sense. But yes, when you've got a 20% drop growth, which is lower than everywhere else, there's opportunities there. So what I want to talk about tonight is I want to talk about rental appraisal versus actually achieved. Because what happens is a lot of times we look at a rental appraisal and we think, okay, how negative is it going to be? How positive it's going to be? It's good to see real life scenarios of what happens. So you look at this property allocation. Roger bought a property in Boona. The appraisal was 750. They actually ended up with 700 per week. So as you can see, it was $50 less than what they expected. Correct?
Correct.
Yep. Then you got Kevin Collette, Armidale. That was supposed to be 685, but they ended up at 650. So what I want to show is the discrepancy of the appraisal and what you get is not always what you're going to get. Sometimes you get a little bit more, sometimes a little bit less. Mark and Melanie in Rothwell, Queensland, there was 550, they ended up at 600. Stefan and Nikki in Bundell, 520, they ended up at 550. Charles and Maverick, 510, got 530. And we got 6 months in Morayfield. They had an appraisal of 510, ended up with 570. So you can see a lot of people get more rent than what they expected. And the reason they get more is because if you wait a little bit longer, by the time your property is finished, usually the rent has been pushed up. Sometimes it can be pushed down a little bit depending on what time of year and everything else like that. For example, if you settled in Christmas is notoriously hard to get rental, and other times a lot better. Okay, Mobo Desert appraisal was 550. I got 580. Nice work, Claudia. Well done.
Beautiful.
So here's some real properties, real results. So Joey and Christine from SA bought in Capalaba 2019. Purchase price was 399. Deposit was 39,000. Current value 819,000. Current profit 419,000. In return on investment, 1,000%, which means...
Look at that, doubled in less than 10 years, George.
Yeah, exactly. Doubled in less than 10 years. And that's, when I say properties double every 7 or 10 years, I'm saying in general.
Conservatively.
I'm conservative because the properties in the bottom of the market, you know, when you've got 15,000 suburbs, the properties at the bottom, they won't do anything in 10 years. And look, I've met people and people have joined that program where they bought properties with other places and their property for 5-10 years has done nothing or gone negative. So you get in the wrong suburb, you're going to get no growth or negative growth. And then you've got the people, the properties in the middle, and they're going to double every 7 or 10 years. And then you've got the top 100, and they're going to double quicker. And this one here, 2019, what's that, 5-6 years?
6 years.
Yeah. So
but on those stats, I've got one of those properties in Capalaba that I bought in 2020. I actually paid a little bit more. I paid 419, and in 5 years, my property's doubled. So I paid a little bit more, but still got the same result.
Exactly, exactly. And you didn't go, oh no, I have to pay 30 grand more. It's not
No, I
fair.
didn't.
No.
I
Look, and they're a yellow belt. So well done. If you're here tonight, please type in the chat and show yourself. That'd be great. I'd love it.
Fantastic.
And yes, and then we got Lindsay from Victoria. He
Yeah.
bought 2023, purchase price 452,700, deposit 45,270, current value 631,000, current profit 178,000, return on investment 394%. And that's like
Great.
2 years. And he's a
Yeah.
yellow belt. He's got two properties, yellow belt. That's excellent.
Luke and
Luke,
Wendy.
okay. More bought at Moorfield, 526,490. Deposit 52,649. Current value 655,000. Current profit 128,000. Return on investment 244%. So look, um, you've got to look at the returns when it comes to property, because when you're leveraging what you're doing, you can really get an outsized return, because you think, you're not paying $526,000 cash. You're paying $53,000 cash, right? And that's very different. And that's how you can get those massive returns. So it's huge. But even if you paid the 526,000, you'd still get a good return. Excellent return. So yellow belt, two properties. Well done.
I
Okay.
think it's time for breakout rooms now, is it?
It's breakout room time. So let's end that prezzo and let's do this. Okay,
Let's
Kane,
go.
we're in Victoria, Canada at present holiday, 2:30 a.m.
Oh
Kane,
wow.
Kane, let's get you on camera. You're a legend.
Yeah, Kane's done really well and he's not stopping.
But if you got your camera on, Kane, I'd love to say hello. I know it's 2:30 in the morning. You might be a bit tired.
Might be in bed.
Yeah, exactly. But I thought I'd ask the question anyway. I need to have a
Should we
crack
do,
at night.
should we do a few quick questions before breakout room?
Absolutely. Yeah, let's do questions now.
So we've got my house in Barscrub, Queensland has doubled in 3 years. Fantastic, Scott. Adam Vella, what type of property would be a good choice for future growth? Two bedroom, 2.5 bathroom, one car, or 322 or 422? It's actually a really good question.
Yeah, look, they can all be good because it depends on the market. So different suburbs, different properties are better, right? So it all depends on the demographic, because you can get a one bedroom unit and it can do really well in the right suburb. So what I do when we do our research is, one, we find the top 100 suburbs. Then when we find the top 100 suburbs, we talk to local real estate agents that are renting properties out and find out where there's an underlying demand. And the underlying demand is going to help you choose what you're going to get. But what I like to buy is things that are bread and butter. What a bread and butter is? Something that a person or a family would like to buy one day. That's what I want to buy. So I don't want to buy something unusual that a person or a family doesn't want to buy one day, because then it's unsellable. If it's unsellable, then you can't get capital growth out of something you can't sell, because to realize your capital growth, you need to either revalue it or sell it one day. So that's the thing.
Yeah, just on that, because I know this comes out a lot with a lot of
Oh, no,
clients.
Kimberly. Oh, that's what I was going to say. Yes, Kimberly, we're going to be in the public stream because we're going to go into our breakout rooms. What I want to do is say to everyone watching live, thank you for watching. It's really good. If you want to miss out, if you don't want to miss out on losing millions of dollars, type in hashtag.
Show me the money.
Yep. Hashtag show me the money. Our team will reach out to you. Oh, one more thing. I've recently updated my book. So if you want a copy of a book, type in hashtag book. We'll send you a copy of my updated book for 2025. I'll be sending it to all our clients as well, which is great. Now we can end the live stream and we can move into our private group.